laser beams. Oh.
I know you are extremely content with the fact that we no longer have EDM as part of the countdown for
Oh
our live
yeah.
cast.
Who's ready? Who's ready to throw down some insurance today?
For anyone who is new to this program, this is Build Your Bottom Line. We're a production of Treadstone Risk Management. I am Matt, and this is Alan. And we owe Alan a very happy 40th birthday, you old man, you.
We'll see how happy it is. I've been in pain all day. I woke up with new pains I didn't recognize.
Just everything's falling apart on you, it sounds like.
1 foot in the grave, 1 foot on a banana peel.
For anyone who's unfamiliar with the two of us, I get to now for the next month make fun of Alan for being an old man because he is now a year older than I am, at least for a month. So there's that. I get to hold that over his head.
I would like to remind you to respect your elders. I will make you get a switch from the tree.
T-minus 30 seconds until Alan tells me to get off his lawn.
No, I would do that anyway. Call the police.
A reminder, do Alan a birthday favor. If you are watching this program, like, comment, subscribe, share, hit the notification bell, retweet. Please share this for us. Helps us with the algorithm, helps get this information out there, and
it's
broaden
good
our
information,
reach.
damn it.
It is damn good information. So what are we talking about this week?
This week, we're talking about builders risk coverage.
Yes.
It is an additional thing to your policy if you have a building that is under construction.
Yes.
Preferably under construction being the key phrase.
Yes, yeah, brand new ground up, or if you're doing like some kind of substantial, renovation, add-on, something like that. And so we kind of covered this just in passing on a older episode where we talked about the different types of commercial business insurance that is out there. And so we wanted to do a little bit of a deeper dive because this is a type of coverage that I think is all too often misunderstood.
Yes.
I think a lot of people, even if you're a business owner, you think of traditional property coverage for a building. This is not that. I mean, it's kind of that, but it's not exactly, because there's a unique set of risks that are associated with when you have a building that is not fully completed or in the course of construction. So right off the top of your head, Alan, when someone says builder's risk insurance or builder's risk coverage, what do you think about in terms of what's different about that as opposed to a standard property policy or a building that's being covered during the day?
Well, this one gives you a slightly different coverage. A lot of people I think a lot of insurance companies call it all risk insurance, which is kind of the falsehood. It covers all risks to a certain point of risk.
Yeah.
This is
Or the way you'll see it in a contract is they'll say have builders coverage on an all risk basis, which is a very old phrase. And if an insurance agent ever says that they can give you an all risk policy, just know if they actually did give you an all risk policy, it would be so expensive you wouldn't be able to afford it.
Yes. So these policies cover damage, just physical damage to the property and the building under construction, not the completed building, not your employee running a forklift into another car, not the drunk guy falling off the top of the building. Those are different. Those are covered by different parts of your policy. So the all risk does not cover those risks.
Yes, exactly. So I think we can just get into kind of some of the finer nuances of it, and then we could talk more generally at the end about it. But so
this is also the policy where you commonly see the phrase force majeure.
Yeah,
and it literally just means basically anything outside of your control.
Yes. Yeah. Well, and it's a policy that in a lot of ways is actually more restrictive than a traditional property policy, because typically the way it happens is the reason why the old verbiage said all risk was they wanted literally as broad of a policy as they can get comparable to a property policy. So typically in a property policy, you have things that are specifically covered, but then there are some blanketed coverages that are there for, say, like, unknown risks or risks that you wouldn't necessarily anticipate and have specific coverage for. Builder's risk is a little bit different. Most builder risk policies are based off of specific types of loss. And so that's why we're drawing that distinction when someone says, oh, give me a builder's risk policy, that's all risk. Doesn't exactly work that way. So
No.
The traditional things are there, right? Like
Fire,
right? Water damage. So water damage, there is a distinction between water damage that comes from, say, like a broken pipe or something. Flood coverage isn't always automatically included, so you might have to add that on. Something like earthquake is something that might be automatically included, or something that you have to add on. A lot of times it's something you have to add on.
yeah. Or I think it's earthquake. What is it? Earthquake, flood, and hurricane. I think hurricane.
Yeah, it could be the wind.
Hurricane,
Yeah,
yes,
the wind
hurricane,
coverage.
yeah, hurricane coverage are sometimes endorsements to your builder's policy
Yes.
or
Yeah.
your builder's risk.
It also includes things that you would normally just assume that were covered, but it has to specifically point it out. So something like collapse, which, by the way, is it's a very broad word, and it means some things, and it doesn't mean other things that you would assume that it means. The collapse is really specifically associated with, say, like the quality of work that was done. And if it was shoddy or something like that and the building falls, then that's covered under that collapse piece of the policy.
But collapse caused by a hurricane may not be.
Correct. Yes. Yeah. That's why it's really important that you're laying out each one of those other individual things. So, yeah, say you have a stick or a frame building that's going up and you have really high winds, and the winds are what knocks it over. That's typically going to fall under the wind or the hurricane coverage, and not,
Yes.
just the broader kind of collapse.
Words in your policy are very important when you're writing one of these out.
Yes. Yeah. The devil's in the details.
Yeah.
What
The
else
two
is in there?
well, the two big ones that happen more and more on job sites lately: vandalism and theft.
Talk about why that's important.
Well, as almost any contractor who builds anything with copper remembers from years and years ago, the big thing was to come into a house that was under construction and tear the wiring and piping out of the house and leave everything behind. Water heater theft was a nice big one years ago. But yeah, I mean, now you've got, punk kids who come onto your and believe me, now that I've hit 40, every kid is a punk kid who comes onto my property without. But
they're like 35-year-olds with a pickup truck, but to you, they're punk kids.
Punk kid, get off my property. But kids now throwing parties in houses, damaging fixtures, damaging sheetrock, leaving spray paint and beer cans everywhere is, vandalism is a costly replacement.
Yes, yeah, especially if some of the worst cases, cause structural damage and stuff. And so sometimes you might even have to take down, most or the entire structure that's been built and redo it. You mentioned the theft piece of it. So this is also something that sometimes gets forgotten by contractors and developers. You have the value of stuff that's been installed, right? So like you were talking about wiring and piping and water heaters and things like that. You also have the value. Yeah, you have the value of stuff that's sitting adjacent to the building waiting to be installed, right? And we've talked about that in the past. So interestingly enough, lumber prices got jacked up, right? If you had a pallet full of 2x4s or whatever sitting on a job site, that was prime pickings for people who
they were leaving the copper and taking the lumber.
Yeah,
I can tell you how messed up it got.
Yeah, and that is again, that's something that gets forgotten. Also, the environmental impact that can happen to that stuff that is sitting out there. So you do have coverage for components before they're installed in the actual premises. And, again, hurricane, fire, wind, along with theft and vandalism. can apply to those, assuming that you have something that lists a limit for it. And then a broader topic that we can talk about here is the actual total amount of coverage that you're getting with this builder's risk policy. I think a lot of contractors, a lot of developers will say something to the effect of whatever, just get it for me because the bank is requiring it, but I want to pay as little as possible, and that is a gigantic misstep. It's a gigantic misstep, especially because if you have you got to remember, like, this is going to cover from the time you start ground leveling until the time that you actually finally get your CO and put the building to its intended use. And so, say it's a 9-month project, you're 8 months in, you're almost completely done, and then you have a fire that essentially destroys the entire addition or the entire building. If you don't have an appropriate amount of coverage in terms of the total building limit, or even the total limit in terms of like the materials and stuff like that, you could be SOL, man. I mean, that could be a big screw up in terms of the actual coverage versus the damage that's done.
Yes.
There's
Especially.
also. Oh, go
Well, I was
ahead.
going to say, especially if you don't, if your normal policy maybe isn't per occurrence, and you just have it set as a yearly thing, and you've already had 2 or 3 claims, and now you've burned through your allotment, then you're really screwed.
That's also that's an interesting point, because some companies, not all, but some, if you're a larger construction firm or developer, some of them will allow you to have an overall either owner-controlled insurance program, or just a standalone builder's risk policy that allows you to add project by project, right? So like you can list those individual projects, or sometimes it'll give you an overall blanket limit of coverage. And to your point, if you have a blanket limit of coverage for any one of those types of loss, and all of a sudden you have 3 job sites that are vandalized for a ridiculous amount, or 3 job sites where you have like some shoddy work that needs to be done because you use the same subcontractor and they ended up being crap, you could end up with basically topping out that limit, the overall limit, and being short on coverage, and then having to pay out of pocket if you want to continue those projects and actually get them back to completion.
Yep.
So yeah, that's a big deal. Here's so I mentioned the fact that it covers from ground leveling and clearing. So often we will get calls from the contractor or the developer, and they will be like, okay, well, we're starting to pour footings. So we need some builder's risk coverage. And you're like, whoa, hold on, Tex. Improperly leveling the ground can also be a source of, settling and thus collapse or structural compromise on that building. And so, as you can imagine, builder's risk policy, builder's risk insurance companies do not like insuring something that they haven't known what's going on since the very beginning. It's very difficult to get a builder's risk policy once you've already stuck a shovel in the ground, or put a bulldozer on the property and started moving stuff around. And then you get into the scenario where like the insurance company's like, okay, well, we understand that they did some ground leveling and stuff. We're going to make sure that there's an exclusion on the policy that says if anything has to do with shoddy work during the ground leveling, we're not going to cover anything. Which right then and there, you've kind of hosed yourself if there was any problem in terms of the way that was done.
Yeah. You got to remember, insurance companies are not on your side. They are there to make a profit. So if they can find that out, they will take that out. And it's no different than any other contractor on the planet. When you do a wiring job in somebody's bathroom and they call and say, hey, the outlet in my kitchen doesn't work. Obviously, you're gonna say, "Well, we weren't working there. That's not our fault. We'll fix it, but it's going to cost you." Well, yeah, it's the same. It's the same thing with this. The insurance company is going to say, "Yeah, well, we're not going to cover that because we don't know what you did prior to it, and we weren't covering that in the first place. So that's coming out of your pocket."
Yep. Yeah, and the problems that you run into too, as far as that goes, is. So insurance companies can have a good working relationship with an insured. But
Yes.
again, we've covered it in the past. Like that good working relationship, they're not necessarily going to set money on fire, okay,
No.
because they have a good working relationship with you. There's a give and take, right? And so most insurance companies, whether you have a long track record with them or whether this is the first time they're like looking at one of your applications, they're if they see something like you already starting work and then you're getting the insurance, they're going to be extremely skeptical of that, and they're going to wonder, like, well, why are they asking for the insurance now? Or again, how are we supposed to insure something that wasn't insured from the very beginning? Are we now worried that they saw that there was some crappy work being done and that now they're insuring it because they're worried that that might compromise the structure in the future? So yeah, you can have a decent relationship, but again, like
Yes.
when it hits the fan, they're not going to take a loss just because they think you're good guys.
And yeah, I mean, I know, I've been part of a kind of a renovation real estate development group now for a few months now. Being just the insurance guy who kind of answers their questions. And the question I keep getting asked over and over and over is, well, why do I need it? What, isn't it just an extra expense? And I every time I get that question, I kind of ask him that, I reply with the same question for all of them just to kind of get their brain working. And it's always, what are you going to do? Let's say they're doing a gut job on a house, and they're replacing everything. I said, when you get to, you're 2 months into the project, you're getting ready to file for your COs. You're getting ready to have tenants move in and start paying you rent on this property. So from the time you bought it till that point, you are coming out of pocket constantly. All your carrying costs are out of pocket. What are you going to do if at 1 month, 1.5 months in, somebody comes in and steals the water heater, the sinks, the fixtures, the plumbing, and that was $20,000 of your job? What are you going to do? You're 2 weeks away from closing and getting tenants in. What are you going to do?
Yeah.
And nobody has an answer because nobody thinks 20 grand. Nobody thinks 20 grand. They think that they're already thinking, they're already thinking, well, I'm going to make 60 grand a year on this with tenants. Okay. You got to get to that point first.
Yes. Yeah. Or so like, say you are on the contractor side of that equation. The other issue is if you are running multiple jobs, right? If you do have to dip into your own pocket for 20 grand because of that thing that happened right at the end, and now you're rushing to try and fix what was ruined or taken, right?
How great are your margins?
Well, yeah, it affects your margins. It affects your operating capital to continue or finish the other jobs that you're working on. So all of those have really like systemic implications as far as how healthy your company or your business is going to be. So that's a really big deal. I think one of the other misnomers as far as like builder's risk insurance goes is the overall value that you get from it. Okay, so builder's risk is going to be cheaper than a standalone property policy.
Yes.
All right, and the reason why is because day one or day zero, there's almost no value, right? Like there's no constructed value. The last day of the policy, there is going to be constructed value up to pretty much, supposedly the max amount that you're covering it for. So over that period of time, the value of the project is increasing over time, which means your cost is going to be somewhere probably in the middle, a little bit higher than half of what it would normally cost you to insure that building during the year. And depending on the type of construction, where it is, it might even be more than that. It could be 2/3 or 3/4. You'll get a little bit of a discount, but that also means that it's really important that you accurately value that construction project, because if the insurance company does feel like they underpriced or something like that in terms of the insurance coverage, this now goes to that longer term relationship where, if you do multiple jobs and you want to keep going back to the insurance company, they're going to now like be skeptical that you're actually telling them the right numbers of whatever the completed project value is going to be, right?
Hmm.
And so that's something to remember. Is like that's we talk a lot about that. That has to do with like your brand image and your brand equity, has to do with your reputation and kind of like the PR, internal PR that happens along
Yes.
running your operation. You
Yeah.
know,
But the easier it is for your broker to go to your insurance company and say, hey, listen, this is their next project. Can if your name is known with them and it's a good reputation, they'll kick back a quote in an hour or two and be like, yeah, here, don't worry, we got you covered.
yeah,
If you're one of those guys who goes in and you file claims on every project, your broker's gonna be running around trying desperately to get somebody to cover you. You don't want to be that guy.
yeah, yeah, and it's believe it or not, I mean, there's literally hundreds, if not thousands, of insurance companies. There might not be hundreds of insurance companies that write builder's risk for your type of buildings that you build in your geographic area. So there is a finite number of doors to knock on. And so if you do burn those bridges, you're going to end up with some problems where if you can't get builder's risk coverage, you can't operate, right? Like you can't go on to the next project because, especially if you're the contractor and you're being tasked with getting it. And again, that's an important thing too. Like sometimes the project owner or the developer is the one sourcing the builder's risk. Sometimes you're required to place it as the contractor. But if you can't provide that, they're not going to let you on the job site. They're not going to let you
No.
start the project or win the bid. Like that's something that's going to go, that's going to essentially halt your operations pretty quickly. A lot more so than any other type of claim that you could really, face.
Yeah, and especially there are areas of this country that will require you to do it to pull permits and things like that.
Mm.
If you can't provide it, you're not getting the permits, and then you're passing on that job and giving it to somebody who can.
Yeah, you're hosed, and that also affects your ability to grow as well, right? Being able to kind of not just get the coverage, but also get good rates on it. And if you're being tasked with sourcing that as the contractor, I mean that's a cost that you have to contemplate in your bid, right? And again, depending on how your margins look, that could dramatically affect your margins as well if you're having to pay up for that line of coverage.
Yes, yeah, and
Yeah.
it will be important, going forward. I mean, unfortunately, the housing market is all over the place right now.
Yeah.
A couple days ago, I was reading story after story about people in court for evictions, and then 2 days ago, I was reading stories about how the CDC was saying, "Nah." Now we're reading stories about how I think it's the Alabama Association of Realtors is suing the CDC and the federal government, saying that the CDC is overstepping their authority. So, and I believe I read today that the one of the federal courts told the U.S. government they need to answer this quickly. Because there seems to be some notion that maybe they did overstep. So let's say that the federal courts come back and say, no, you overstepped, evictions are back on. You're going to have a lot of desperate people doing a lot of desperate things.
Yeah, so there's regulatory implications right now in terms of construction projects. There's obviously supply demand issues right now in terms of contractors being able to actually complete these projects profitably. There was also so when we were in the middle, I mean, we're still kind of in it, but when we were in the middle of the gigantic price appreciation in terms of lumber, that was a big deal in the builder's risk market because the project that you priced out at as a total value of whatever, if it's $1 million, right? If lumber goes up overnight on you and you haven't ordered that product yet, or if it hasn't been installed yet and the overall value of the building, you're not done with it yet, now is all of a sudden, $1.25 million, okay, and you have a loss on that building, you could be underinsured because if now you go back and try and replace that lumber, they're going to have to source that lumber at a higher price. You might only have 3/4 of a building's worth of money coming from the insurance company under that circumstance, So that's continues to be a big problem because even though lumber's come down a little bit, we're still talking about an environment where it's still tough to find things like windows, trusses.
And with the I'm sure a lot of people have heard about the microchip shortage now, which is causing major problems in automotive and appliances are a big microchip user, and you're hearing stories now about appliances being, 8-10 months out. I know of a company who's trying to buy forklifts. Forklifts are 6 months out. You can't get a forklift if you want to buy one. So people are trying to, which, if you have equipment on a job site, make sure that's covered too. That's going to be another interesting thing that's going to start happening. But yeah, I mean, people can't get their hands on equipment, on appliances. I mean, all this stuff is things that you have to take into account when you have one of these policies. If you're installing high tech equipment in a building and it goes missing, and now you're out, you're up shit creek for 6 months, that's going to hurt you a lot.
And you actually raise a really good point too. Regardless of what it's costing you or where you're sourcing it from and kind of the timing there, if you're having to store it off-site, okay, a typical builder's risk policy is only going to cover those things that are supposed to go into the building within basically 100 yards of the actual work site, okay? You can negotiate around that. You can maybe add on a little bit of an extension depending on, what your work site looks like and things like that. But the fact still remains that, for theft and damage of, say, materials, building materials and appliances and whatnot that are supposed to go into it, if you are storing that stuff offsite waiting to be installed, your builder's risk isn't going to cover that. So there's also an interplay between the property or the inventory policy that you have and the builder's risk for the individual project that you're working on. Okay. And that's why it's really important to have someone who is versed in that interplay between those different policies, because they're going to be able to tell you where one stops and one starts, or vice versa. Right. And so we actually, I had a claim that I worked on for hurricanes when I still am between calling it Hurricane Sandy and Superstorm Sandy.
Hurricane Sandy.
Yeah, that's a whole other story about hurricane deductibles and how New Jersey's governor at the time, Chris Christie, wanted to call it versus everyone else, and how pissed off the insurance company was about it, the insurance industry. But during Sandy, we had a claim where there was a location of operation, and then there was a number of off-site storage facilities where the equipment, they were actually able to break down some of it and move it to the storage facilities inland because they thought those were going to be more protected. And then what happened was a couple of those storage facilities actually were less protected than if they had just stayed on the location, and they ended up getting flood damage and stuff like that. And so it was two different policies, or it was like a package, and it was two different pieces of those policies. And had it been insured incorrectly, there would not have been coverage for the that property that was moved to that other location. So that's something really important to understand as well. I think a number of contractors are also running into the issue of, all right, if we are on a backlog or whatever, okay, you could end up with a buildup of certain types of input materials where it's much easier to source it, and then you could end up with a shortage of materials, and so you can't complete one project. And so say it's appliances, right? You might have 2 or 3 projects worth of appliances sitting waiting to be put in to a building, but you can't get them in because the building's not at the point where you can actually start to rough in and then put the appliances in.
Yes.
So there's a lot of moving parts right now that need to be contemplated. Builder's risk is that kind of like, it's that home base piece that's really important. The other thing that's needs to be understood about builder's risk is it's ensuring that building that you are directly working on. It's also ensuring a building that you probably have a bunch of subs that are in and out working on.
Yes.
Right. And so I should hope. What's your tagline, Alan? Have a what?
Contract.
Contract. Yes. Contract. Yes.
Contract.
It's like monorail. Contract. So. Have a contract, right, with the subs, and make sure that they have insurance. But in the situation where they give you bogus insurance or they don't pay their premiums or something like that, if the sub does faulty work, and that causes a loss or a halt at that project, the builder's risk can step in to cover some, or maybe if you're lucky, all of the losses and the damages associated with having to whatever, rip out shoddy wiring and putting new, or sometimes if they screw something up, you have to have an architect come in and throw a band-aid on it by changing the design. All of those costs are associated with that program and that project and that holdup.
Yes.
Now, we could talk about the difference between soft costs and hard costs. Okay.
Okay.
The hard cost is what you would think about it. It's the lumber. It's the masonry. It's the stuff that if you dropped it on your foot would hurt in terms of actually building the building.
But
Okay?
that wouldn't be covered by builder's risk. So
Well,
I'll
yeah,
drop
yeah,
it on your
no,
foot.
that's workers' comp. That's a different episode. And hopefully you're not intentionally dropping something on your foot, because then that might not be covered. But yeah, so it's that the actual stuff that goes into the building. That's the hard costs. Okay, the building costs, even like debris removal if the building gets compromised and you have to demolish part of it and take it out.
Yeah,
right?
One day we'll get into workers' comp and we'll discuss all the excitement about what happens if you work in two different states, or if you work in a different state in a different city, or if you if you ever want to see your broker sit at his desk with a gun in his mouth, give him a workers' comp problem.
There are some of those that are definitely drink and cry moments. I'll tell you that much. But so that's hard costs.
That'll be our teaser. That'll be our teaser for the workers' comp. Want to see us sit in our chairs with guns in our mouths
and sob uncontrollably like children. So that's hard costs. Soft costs are the planning. It's the design work. It's the architect. It's the engineer. It's the construction management company. It's the permitting and licensing process and everything like that that's associated with the actual structure.
Mm-hmm.
And so a lot of times those are also estimated as well. So for instance, you can end up with a project that ends up, having fire or water damage or something like that, and then the architect and the engineer then have to come back in and do additional work because the actual groundwork might have been compromised. If it was only partial damage, the architect and the engineer are going to have to come in and look at, all right, what has to be ripped out, what can stay, and do we have to alter the plan?
A prime example of that is that retaining wall in New Jersey that collapsed. That kind of oopsie is going to be covered under a builder's risk policy to a point.
Yeah,
they got to figure out what caused it, but
yes.
But they have a lot of people that are now having to be brought in, paid. And I mean, it's a state project, so it's all coming out of the taxpayer's pocket. But it's still, the contractor who's working on it still has a lot to answer for, and a lot of that has to come out of their insurance policies to repair it.
Yes, and something to remember: it has to be structure or something related to the structure. All right, so who was it?
Like bad footings and poor digging that may or may not have caused that wall to collapse because they didn't think about water runoff.
Yeah, and if it's a structural component of the building itself, or even kind of like the area around a structure, that's eligible. There are other things that you can get a builder's risk policy for, but it's not a guaranteed. So like, for instance, if you're doing any kind of project that has, say, like recreational fields or a playground or something, those obviously aren't structures, right? They're kind of like, not to make light of it, but I mean, it's basically landscaping, right? Like you're doing
landscaping.
Yeah, you're resurfacing or you're resodding or if it's AstroTurf or something like that. So you can get a policy to cover that that's similar to a builder's risk policy, but you're not going to be able to cover that with a traditional builder's risk policy. It has to be a very specialized insurance company, actually, that's providing that coverage. So that's also something that folks have to understand is, say you're building out this structure and there's some kind of elaborate, garden or walkway system or something like that that's set out in the front or on the sides of the building, that may or may not be covered by your builder's risk program. And so that is something that needs to be considered as well, because you might either need an add-on to the builder's risk policy or a whole other separate policy to cover that exposure. To go back to Hurricane Sandy, Superstorm Sandy, whatever, we had a ton of clients that had like these like paver walkways, right? And the paver walkways aren't structure. They're kind of like landscaping. They're just, kind of like changing the area around. And obviously when you get water intrusion, it can pick up those pavers and move them or make them all uneven and unsafe for people to walk on. And so that was a big question was, all right, well, what policy is going to pick up for, this paver walkway, which by the way, in order to replace was like $1 million, right? We're not talking, pennies and dimes, right, or nickels. We're talking serious money. So that was fun. There was one of the walkways actually had a boat deposited on it and caused a gigantic it wasn't a sinkhole, but like a giant divot in the middle of the walkway, right? Which, by the way, hauling the boat away is also another cost associated with what that looks like. So
nope, you just leave it there and it becomes a lawn decoration.
Yeah. Just let the kids play on it. No, please don't. So that's really kind of the long and short of builder's risk. I think a lot of it has to do with just do not get caught into this trap of, well, it's just something I need for the bank.
Yeah,
for them to sign off on the loan.
It's greatly misunderstood. It is not a common insurance policy. It is not a standard insurance policy. It's not something that's given to you when you sign up for whatever insurance policy you cover, your general liability. It's not included in that. Yep. It's a separate policy specific to the project you're working on.
Yeah. The misunderstandings around builder's risk are plentiful, because it is very much so looked at one of those things that's just a formality to get to work, and it really isn't. It is literally like protecting your ass when it comes to a project, because like I said, God forbid you get within a week or a month of completion and you have a substantial or a complete loss of that structure. I mean, you're talking huge dollar amounts to, something else that's included in builder's risk is, demolition and debris haul away. And if those numbers aren't high enough, I mean, hell, a big enough of a structure, you could be talking hundreds of thousands or millions just in the demo and the debris removal cost, right? That is something that in and of itself you might end up underestimating. And so again, when you're like, hey, just give me the cheapest builder's risk policy possible. All right, well, here's one that's cheap and it only has $100,000 in demolition and debris removal. And you're like, oh, fantastic. And then all of a sudden you have a loss and it's $500,000 to cart everything away. And you're like, oh, well, where am I going to get that $400,000 from? And you're like, well, how much you got in your wallet, right? Like, that's exactly what the insurance company is going to say, And again, that goes to that relationship thing. Like, it can be a close relationship, but they're not going to find money in the policy that's not there. They're right. It's not like Monopoly. There's not going to be a bank error in your favor. Like, that's not the way it happens. You might be able to find some coverage elsewhere, which is kind of also part of our job in terms of framing a claim to try and get you back to as close to, if not, right where you were before the claim happened. But look, I mean, sometimes you can't get blood from a stone. It's just, but I don't know. Especially
when it was on you to do it right and you didn't do it. I mean, as hard as we work for you, if you didn't take our advice or you didn't take, the GC's advice and you didn't get the coverages that you were told to get, we're going to come back and say, listen, there's nothing we can do about it. You were warned and you chose to ignore it.
Yeah. Yeah. And look, ultimately at the end of the day, I mean, we do walk away from jobs. We do walk away from opportunities saying like, look, we understand what you're asking of us, but just professionally, we can't place this coverage this way. And I mean, it sucks for us because we don't make any money in that situation, but you know what? That's something that we actually do to try and protect the client that we then don't work with, because hopefully they see, the misstep that's about to happen if they do go with someone else's, program or something like that, where they are willing to just kind of give them what they want,
Yes.
But yeah, such
we,
is
we
life.
we have an obligation to tell you what you need, not to just wing it and hope that everything works out in the end, and we can go, hey, see, we pulled it off for you.
Those shots in the dark typically don't pan out too well when you
No.
work in the insurance industry. So anything else? That's all I really got on Builder's Risk. Anything else on Builder's Risk from your angle, Alan?
Contracts.
Contract.
Make sure you have contracts. I'm gonna keep on saying that till everybody on this planet has a written contract.
I need a Mad Money style button where I could just hit it. It's like, contract. Yeah, no, I'm glad that we were able to do this. We'll do some other drill downs on a couple of the other types of policies that are out there. I mean, some of them are really kind of cut and dry and they make sense. This one's a little bit of an oddball one where, again, it's specific cases that you're using and it's not like year-round coverage. And so that's why it's misunderstood quite often, and that dynamic of, oh, well, the bank said that I needed to have it, so just give me whatever the bare minimum is, So yeah, that's a big component there. Anything else you got working?
Oh, we got work. I am so exhausted, and I'm just trying to think of what we got working at this point. Let's see. We've got what do we have? Obviously, we have the podcast up on I almost said Odyssey. No, it's not Odyssey. What?
No,
Which one is
we're
it?
up on Anchor, but
Anchor.
It gets distributed to all the different podcast platforms. So like if you listen on Apple or Google Play or whatever, it's on there. Spotify.
We have the old videos up on YouTube.
Yep.
We're trying to get a lot more active on Twitter and Facebook and LinkedIn and all those, posting more information, trying to spread other people's information as best we can. If you are in the business community and you have an interesting company that does something out of the norm, we'd love to interview you about it and talk about your risk mitigation tactics and ways that we might be able to help. But beyond that, man, it's another Thursday in the books for us.
Yep. If you have anyone that you would like to see on the program, where regardless of the outlet that they're putting information out on, is if they're saying something of interest to you and you would like us to bring them on and kind of pick their brain or talk a little bit more in depth about something that they talk about on a day-to-day basis, throw it in the comments or send us an email, and we'll definitely work as hard as hell to try and get those people on here as well. We have a handful of people that are in the mix here. We have someone who is going to be coming on shortly talking about 1031 exchanges. We're going to have someone talking about commercial lending, specifically SBA lending, and then traditional commercial loans. Who else we got on the hook? We have a couple of people that are going to talk about the real estate environment in certain regions in the United States, so that should be interesting. Us both being Jersey boys and trying to get some exposure to some of the other areas throughout the country in terms of what real estate looks like there.
Really, we're just doing it because I'm trying to find a new place to live, so I'm just going off of.
We're auditioning realtors is basically what we're doing.
I'm stealing free insurance that I don't have to Google. I'm very tired. By the end of the day, I'm tired of Googling. Also, hopefully, I've got. Hopefully, I'm trying to get a electrical contractor who's got some who does a lot of commercial work. Try to pick his brain on what's happening in his industry and what he has to go through on a daily grind. You know what tonight is?
What's tonight?
Football, baby.
Oh yeah, what is this? The Hall of Fame game?
Yeah, the Hall of Fame game. I don't really consider that football, but I mean it is on tonight.
Who's playing?
Oh, I think Chicago. I think it's Chicago. I don't even know. It's like Chicago.
It's usually Chicago, isn't it?
Yeah, it's. I don't think it's anything magical. Who is it?
Looks like it might be Steelers
Cowboys.
Yeah.
I call
Jerry's
that.
Boys.
I call that can't miss football.
Yeah. With a big question mark.
I mean, it's still football technically. I guess.
Yeah.
I mean,
it's football.
You know,
it might be a mutant version of Texas style football, but it is football.
the important thing is you get to see Jerry.
So look, beginning of new football season, we'll be able to talk some football going forward here, so this will be good too.
Unless the NFL determines that we're breaking their copyright rules again.
I guess we just can't share any pictures or live feed. I guess.
Yeah, no pictures, no live feed, no names, no quotes from other sources. Apparently,
we're making a ton of money off of it.
Stop buying our merch.
So that being said, we got a ton of stuff upcoming, and look, we also have the Facebook group. So
yes.
If you are interested in getting into a group of other professionals in the area, in this industry, whether it be contractors, developers, and things like that, helping to cross-pollinate, share some best practices, maybe even drum up some business. Who knows if you form some good relationships in there. Definitely look up the Facebook group. I think it's just if you put in "Build Your Bottom Line" on Facebook, it'll come up with both the video production page as well as the group. So what you want is the group for that, kind of collaborative, conversational part of the the community that we're trying to build.
Yes. Here. So. Yep. I do believe that it is under. It is quite literally. I'm just looking at it now. Build Your Bottom Line, all one word.
Yep. So definitely check that out.
Yep.
And you get to talk to us directly. We'll definitely comment on there and stuff like that. So
yes, share inappropriate memes, all kinds of fun stuff.
Yeah. Tasteful, but funny.
Things that can't be seen via your customers.
Yeah.
So you can talk shit about your customers and nobody even knows about it.
It's kind of like
people
Vegas,
in the group,
right?
Yeah.
So with that, I want to thank everyone for another episode in the books. And let us know what you thought about the new lead-in countdown and graphics and stuff like that. And we also got a little bit of a different outro here too, so hopefully folks like that as well.
It was awesome.
Yeah, well, the old one, I think, Alan, it was killing you. I think you were not a big fan of the old outro.
No, I hated that. I hated the outro with a passion. I'm so glad to see it gone.
So with that, everyone have a good evening. We will be back next Thursday at 8:30 Eastern. Good night.
Good night.